Good morning, good morning. How's everyone doing today? Glad to see you've joined me this morning on this Throwback Thursday, where we take it back to you and let you submit your requests for charts that you'd like to have a look at. They don't have to necessarily be any Forex pairs or gold or oil, just anything, stocks, indices, anything you'd like, any charts you're looking at that are difficult to read. Charts that you're looking to trade, but you just want a little bit of confirmation that, you know, the direction that you're going to open up trades in is a good one. So if you have anything, type it up in the comments section and we'll have a look at it today. All right. Nice to see everybody. Thanks for joining. So what do you guys want to take a look at? I pass the floor on to you. Any specific charts? Good morning. Right now, I was just looking at the SPY. I know a lot of you do trade this, so we can take a look at it if you'd like. Sure. Oh, okay. Here we go. Here we go. All right, so let's take a look and see what we see here. You know, I'm taking a look here at the SPY, and what I'm looking at is, you know, we have that really nice strong uptrend that was holding for quite some time and still is. If we take a look here at the monthly chart, okay, we have a couple areas here that we should be focused on. This is institutional demand that we have here on the monthly chart. Okay, let's switch it over to the weekly chart. Let's take a look here. We also have an area here that I would be interested in. And this is an area that was confirmed as demand right here. When price came down and bounced into it and then took off. So that's a confirmed area of demand. That's good. And we're seeing price just slope down, fall short of hitting that area. So now we can take a look at what's taking place there. We switch over to the daily chart, and this is what we've got going on here. So we had price was uptrending for some time, okay, and then it broke the uptrend and started moving to the downside. So let's fix something here just to make it a little bit neater. We stretch this out like that, and there we go. So we had supply being formed here. Okay, this is institutional supply that was formed here, and then price dropped, hit an area of demand, retraced up to that area of supply, and then dropped again. And if you take a look here, here's an important area that I want you to focus on. Okay, this area was traveled through here, came right back up, but it was respected here, and it's being respected here right now. And we're seeing a big rally up in price towards that descending trend line. So if anybody was interested in getting long this chart, the first thing you'd have to wait for is this area of supply to be removed. Okay, this is the key area that I'd be focused on. Okay, because that's the latest area where the banks were filling in supply to drive price to the downside. So if you're long, okay, some call options, or you know you're looking to engage in some stocks that are posed to rally, how I would trade this is I would wait for this area of supply to be removed. Okay, because logically, if you think about it, if this area of supply was created by the banks to facilitate a move lower, then price can come back up and contact this area again before dropping. Right? But if it removes this area, then logically you have to conclude that the institutions are not interested in pushing price lower anymore. So if they're not interested in pushing price lower, then they will likely start shifting momentum back to the upside and taking price even higher. Okay, so that is what I'm seeing with respect to the SPY. We've got similar situations as well with the NAS. Okay, came very close to hitting that weekly area of demand that we have mapped here, very close. And then on the daily chart, we have something similar. We got a descending trend line like this. And we have, let's see, this area has been removed, coming back up. So obviously, with respect to this chart, if we wanted to go long, we'd need this area to be removed, okay? Because this is the area where the banks are filling in supply, and price can come up here and respond and continue its drop. So in order to know if the momentum is going to be shifting to the upside, we'd want this area of supply removed to open up the floodgates for a move even higher. And a very similar situation with this one as well. Okay, not much difference. Okay, the Dow Jones. We just need this area here is more difficult to read because we don't have a proper area, but what I'm seeing is there's an area of demand here that is holding. Okay, this is good. So this can just rally up to the upside. So when looking at the Dow Jones, there's nothing really stopping price from rallying up right now. Okay, but I'd be focused more on those other charts to determine if the momentum is actually going to shift to the upside. Okay, let's see. What do you guys want to look at? A lot of people wanting to look at Euro US dollar. Jason wants to look at oil. Let's take a look at oil. See what's going on here. All right, so what do we got here with oil? This is one that we've been watching for quite some time. And we had a weekly target up here, which just recently got contacted. Okay, this is the weekly target. Okay, this is our target for price. And it contacted it, and now we're seeing the sell-off. Okay, so why is it selling off? Well, because when we find our targets, we're looking for areas where the banks are going to take profits on long positions. Okay, because where the banks take profits, that's where we want to take profits. If the banks don't take profits, or if the banks are not poised to take a profit at a specific area, then we're not going to choose that area as a target. Okay, long positions would need to target this area up here, because when the banks get the price up there, they'll be looking to take their profits, which will fuel a move to the downside, like what we're seeing here on the daily chart. Okay, we can obviously see that selling that came in from those long positions, which fueled a move to the downside. Now, we are looking to engage this chart to the long side once this retraces and they start to build momentum again. So that is what we're going to be watching for. But in order to do that, we need to make sure that the banks are going to start reaccumulating long positions again. Okay, and we can do that in several different ways. We can look at the COT reports and look at the institutions and look at their positions and see if they're going to start buying again. But if we're going to be taking shorter term trades, the positions of the banks in a situation like this is not going to be that helpful, because we're getting the data 3-4 days late, so they've already made their move, right? In 3 or 4 days on 1 hour charts, 4 hour charts, daily charts, prices already made their move. So in order to take a position on a lower time frame and taking advantage of lower time frame moves that we expect, let's say short-term, mid-term moves, then we need to be watching for the signs on the charts that the institutions are indeed going to start accumulating. So on the daily chart here, we have a decent upward trend. This is an upward trend that we located. But the thing is, our rules prevent us from just taking trades off of demand zones within upward trends, because we have institutional supply coming into play here. Right? So now we have to determine the strength of the supply versus the strength of the demand that is going to come into the market. If the demand is stronger than the supply, then we can take trades at that demand zone with the expectation that price will just continue up higher like that. But if the supply is more stronger than the demand, then we need to see that the banks are going to start accumulating price again. So price is hitting this area here. So let's switch it down to an hour chart and see what is taking place here. Okay. So this is what it looks like. We have the institutional area of demand located here. And we have price already making a small little contact here. Very nice push to the upside. So there's not much in terms of what we're seeing here. All right. This is pretty basic, this move to the downside. So we're not seeing much here. But we will be locating key areas of supply on the way down and looking for the removal of those supply zones. All right. So it's the same thing like when we were looking at the SPY and Dow Jones and Nasdaq. In order to know that the institutions are going to take price higher, logically what we have to do is we have to locate their areas of supply and watch for the removal of those areas of supply. Once those areas of supply are removed, then we have the signal to continue pushing higher. So far I'm not seeing anything like that on this chart. So we'll go back to the daily. You said you want to look at the 4-hour chart. So we have a nice upward trend here on the 4-hour chart. Now remember, this is the 4-hour, right? But you also have to understand that there's major supply coming down here. So with that force to the downside, will areas of demand on a 4-hour chart be sufficient enough to hold price up? Now our rules say no, it's not going to be strong enough. So we would have to wait for additional signs that price is going to move up. On a 15-minute chart, we're breaking this down too low. Okay, looking at a 15-minute chart when we have major supply pushing down like this, it can work short term, but longer term you'd have more of a problem with that. Okay, so if I take a look here, I can see that there's institutional demand here. Okay, that's institutional demand right down there. But you have to remember that this is a 15-minute chart. We got serious supply coming into play. All right. So can this work out short term? Yes, it can. And if I was going to risk my money on a short-term play like this, then I'd have my targets, a lot closer than surpassing these highs. That's for sure. Okay. I would be doing extensive analysis in this area here to locate any supply created by the banks, because a move to the upside like this can definitely take place, because at the end of the day you have demand that is in play, right? But depending on what time frame that demand is that is in play, it's only going to play out for a certain distance on the chart. Okay, that momentum is only going to be short-lived. So in this case, we're talking about a 4-hour chart. So the momentum off of that 4-hour area of demand could last 4 hours or 8 hours or even less, depending on the supply forces that are in play. Okay, if the supply forces were very weak or on a very lower time frame, okay, if the supply was on a lower time frame, then yes, I would take this trade and I would have short-term targets here, maybe a 2-to-1 target, right? Stop loss here, entry here, 2-to-1 target, take 1/3 of your position off, and then that way there's no risk on the trade. Once 2/3 of your or 1/3 of your position is taken off at 2-to-1, then the trade is risk-free, and you can just sit back and let this sucker ride, right? Locating targets on higher time frames. Okay, because the idea would be that the demand coming into play here off this 4-hour area of demand would be sufficient enough to propel price all the way back up to where we came from, back into the supply that pushed price to the downside, and even further. And so then we would locate our targets based on the institutional supply areas that would come into play after this initial force to the upside. Okay, so can it play out under the short term? Yes, it can, but I'd be very careful with that. I'd be managing my stop losses very, very closely. Okay, but it does seem to be holding right now quite well. That area of demand, it does seem to be holding quite well. So let's take a look at another one. What do we got here? We got the EU, Euro US dollar. All right, so here, this is one that we've been watching for quite some time, and we see that price has removed a very important area of demand here that the banks had created. Now, there are issues with this demand. Okay, we located it, but it wasn't of highest quality, and so because of that, it broke through. And we've been analyzing this chart for quite some time because we have higher time frame supply forces that are coming into play here. And so when that happens, it takes a while for price to play out. But when we were looking for evidence to support the fact that this demand zone would hold, we were not finding it. Okay, all throughout all the reactions to the upside, as price was moving up from this area of demand, what we were watching for were signs that the banks were actually going to use this area of demand to facilitate a move higher. And the whole time we kept watching for it, it never transpired. And so we had to come to the conclusion that this area of demand was getting weaker and weaker and weaker. So this is the area of demand here. Just show you an example of how we do our analysis here. This was the area of demand. And so its first contact was here. That's the first contact of demand. And what we were watching for was to see if the institutions were going to build sustainable structures that would help to facilitate a move higher. Now, as you can see, price start to play out to the upside here. Okay. But at the time when we were examining this structure to the upside, we had concluded that this structure was very weak. All right. And because of it being so weak, we knew that the institutions were not going to sustain this move to the upside. And so then what ended up happening? Price turned over and dropped back down. So now we have hit number 2 right here. That's hit number 2. And the reaction to the upside, as you can see, was very small. Nothing in comparison to what was here. So it was extremely weak. Now we have price coming back down again, and we have contact number 3. So, in our rules, what we know to be true from analyzing the charts is 3 contacts of a demand zone makes this area of demand extremely weak. Okay? It's like taking a sledgehammer and slamming it into a wall. That first time it may hold. The second time it may hold. But, you know, when you swing that sledgehammer to a hard wall, right? You got the sledgehammer. When you swing it to a wall, that bounce back is pretty big, right? Because it's holding quite well, right? Similar to this move to the upside here. When you go back again and swing that sledgehammer back to that wall, because it leaves a big indentation, the bounce back is very short, similar to this second move here. And the next time you throw it in, it might even get stuck into the wall. Might not even have much throwback at all, just like here. Okay. And the next time you swing at that wall, guess what? You break through it. Okay. And this is the very essence of how the banks move price and how areas of supply or demand created by the banks get removed. So just understanding that one concept is so key, because if you look at the conventional technical analysis wisdom, they say that when an area gets hit multiple times, it becomes stronger. You see the problem with that? That's the exact opposite of what's actually happening in real life. The more an area gets hit, the weaker it becomes. It does not get stronger. And so this concept of, well, the more times it hits, the stronger it gets, you know, that means the more time it hits, the more your belief in it holding is going to become stronger. When it's the exact opposites, then there's no wonder that a lot of people use this type of system and fail, because it doesn't stand when you are really analyzing charts. If an area does hold, what traders don't realize is that if an area does hold after several hits, it's only because there's an area of institutional demand there and the banks are buying. Okay, but first of all, you'd have to know where that institutional area of demand is and understand in what sequence price is when you're considering all the time frames, and knowing that there is an accumulation happening at that area before it takes off. You'd have to understand those things in order for that type of trading scenario to play out in your favor. So now we have price breaking to the downside, and we have no reason to believe that price can't continue even lower. So we're on watch for that, because when we look at the higher time frames, this sucker can drop quite dramatically. All right. Now we always talk about charts being light or heavy. All right. When the charts are heavy, we want to get in short. When the charts are light, we want to get in long. That's pretty much how it works. But in order for things to be light or heavy, we need sustainable trends, sustainable structures that we can trade off of. So right now, what we're focusing on is if the institutions are going to create a sustainable trend or a sustainable structure that we can base a trade off of. Because we can't just get in short and pray that this momentum is going to continue, right? Because that wouldn't work. That may work, in the short term with a couple trades, but long term, that type of thinking is not going to work. All right. So right now, what we're focusing on is waiting for those structures to present themselves, and they will present themselves. If the banks are going to create a structure to facilitate a move down, we're going to see it. Okay. The key is to know what to look for. Okay, and on what time frame you should be looking for those things. But yeah, we are watching for that on the on this chart. Aussie Japanese yen. Let's take a look here. So Aussie Japanese yen. So what are you guys thinking about Aussie Japanese yen? Benedict, is there any type of direction you're looking at? Upwards, downwards? What were your thoughts with respect to this chart? Because what I can see right now is that we had price traveling this way. It's shifting momentum to the upside, but it is in consolidation right now. It is in a phase that anything can happen, right? So it's just like, you have something like this. You have a landmass here, okay? And you have a landmass here. And in between the landmass, you have an ocean, okay? Bear with me here. And so this is the port where you had your ship. The ship was at port, okay? And to simplify what we're doing here, let's call this demand. Okay, and let's call this supply. So what causes this ship to go from this area here on the left to this area here on the right is momentum, right? Or wind. Okay, you need wind to blow. It's got to be strong winds to blow in this direction to hit the sails to cause the ship to go from here, the left, to the right hand side, right? If those winds die down, then the ship dies down with it. So what we are determining when we're looking at the charts is we're looking at the wind, okay? We're looking at the force, right? And that wind is represented by the different areas of demand and supply that come into play, the structures that are formed by the institutions, and the trends that are formed, okay? This is how we determine where this ship or where price is going to go. Okay, so remember, this ship represents price. Now, you could have the ship moving to the left or moving to the right with a lot of wind blowing at the sail. But the problem is when you have the ship stop. Okay, when the ship stops right in the middle of the ocean and the wind dies down, The only thing that's going to propel this ship in any direction is for new wind to come back into play. All right? But for new wind to come into play, you have to wait and watch the charts and be able to spot where these forces are. And this is a situation that we call consolidation. Okay? When price is in consolidation, it's basically this ship sitting in the middle of the ocean, and we're waiting for the winds to come in and pick up on the sails and propel price in a certain direction. When it's here, we have to be very careful, because what you don't understand is that winds can come in this way, short term, and blow the ship a little bit to the left. And then winds can come in this way, short term, and blow the ship to the right. Okay? This can happen. And if you get caught in this situation, you can be very lucky, okay? Because if the winds are blowing the ship to the left and you get into a position expecting the ship to go this way, you could get lucky, because the winds can push the boat back this way and then a little bit more, and then it creates a bigger trend, and it creates a formation, and then before you know it, the boat is on the port here. And you got in right here and exited right here for a wonderful trade. But you have to understand the dynamics of what's taking place in real life. That those little winds could have pushed back against you and hit your stop loss. All right? So those things can happen. What you want is to have something very strong, very forceful, that's going to propel this boat to the other side and know exactly where to get in. That's the key. So when I'm looking at this chart here, okay, this is the port. Okay, that's the port, and this is the port. Okay, so you see where price is, right in the middle of the ocean. Some strong winds can push price to the upside, and that is, looking at the daily chart. So remember, those winds pushes price up, and then it pushes price down, and then it pushes price up. What's next? Push price down? Maybe. Or maybe it takes a little bit higher, and then it drops from there, and then it comes down here, and then maybe it goes back up here. So there's nothing on these charts indicating a very specific move. When we don't have anything indicating a very specific move, it's very difficult to trade. Yes, you can look at the Aussie pairs to determine their strength, and yes, you can look at yen pairs to determine their strength, and judging based on those cross pairs, determine whether the likelihood of prices is to go up or down, and accumulate a position slowly. You could do that in a situation like that. I would much prefer to just focus on charts that have higher odds of direction. Okay? That's what I would be doing. I'm not sure if you cover USDZAR. We could look at that. I don't really look at that, but we could for the sake of examining the charts. All right, so what do we have here? Let's take a look at the monthly first. Always important to see the bigger time frames. So I would start off by doing something like this, and I see that trend line holding very well. Is this all-time highs that price went to? Yes, it is. Okay, so I would also take note that we have, let's take a look here. What is taking place here is we have that. Okay, this is institutional supply that's in play right now. So anybody drawing trend lines here would be like, oh, we have an ascending trend line, and price is responding to it, and it's reacting from it. So it looks pretty good. Yes, it does look like that, doesn't it? It looks like price would do that. Yes. And can it do that over time? Yes, it's possible. But what's important to realize here is that even though there's an ascending trend line and price is contacting that ascending trend line, we have institutional supply that is in play here. Okay. And so you have to ask yourself, why are the banks creating supply on this chart? Are the banks creating supply on this chart because they're going to facilitate, they're going to use that to facilitate move lower? In this circumstance, that could very well be the case. Okay? This is how you have to think. Why would they create supply? If price was going to go higher, what we would want is an area of demand being contacted alongside that trend line. That would be very good signs to suspect that price is going to go higher. Why? Because the banks are creating the demand. And price is contacting an ascending trend line. Two very positive things to cause price to go even higher. So in this case, I don't see that. Okay, so the odds of price continuing higher are lower, and the odds of price moving lower from here are higher. That is what I would conclude. All right. So just based on that, now we can go over to the weekly chart if you would like. And we don't have any proper ascending structures, okay, to the upside, and we don't have any structures to the downside. And it actually looks like we may have an area of demand right here, okay, but remember, we have institutional supply right here. Those are the supply forces coming down. Okay, so price can stay in a range. If it removes this area, great. That's a good sign that it's going to go higher. If it removes this area, this demand zone, that's a sign that price is going to go lower. Okay, so in a situation like this, I wouldn't be trading until one of those two things happened, and then that would be how you would know with higher odds that price is going to go in a certain direction. I wouldn't just jump to conclusions. Not in that situation. With respect to the CAD yen, this is one that I'm interested in potentially getting in long. I've mentioned this with the students, and but I'm waiting for those proper structures to be formed. So there's key trade signals that we will be watching for. Okay, and those trade signals will represent the institutions creating sustainable structures to allow us to engage in this chart to the upside. Okay, I think there's a good chance that it's going to go higher, but we just have to wait for those key trade signals, because in the meantime, you know exactly what I was talking about before, right? This is the port, okay, and this is the port, and right now we have this port where the ship landed into port, but it's coming back. So, you know, putting things into greater perspective, okay, let's do the drawing again and explain what we're talking about here. So we have a landmass here. We have a landmass here, and we have a landmass here, okay? And let me just draw a line here and separate. So this is looking at it head on and looking at it from above. Okay, this is the landmass, and then the landmass in the middle here is an island. Actually, you know what? Let's make this a little bit easier to understand. This is the ocean. All right, and this is your landmass here. Then you have an island, and then you have your other landmass here. Okay, so this landmass here is this one here. This one is that one, and so forth. Okay, so just like I had explained before, you have the ocean, okay, and the ocean. Now, the boat is here. It starts here, okay, and then wind comes in and picks up the sails and drives the boat to here. Now we have a boat here. Now, if you're looking at the overall itinerary of this ship and you understand what its plan is, okay, that it's going to leave this dock here, travel to this landmass here, but eventually its goal is to get to this destination here. Then what will happen is when the boat reaches this landmass here in the middle, it's going to move a little bit in this direction. By how much? We don't know. Okay? Not in this specific scenario on the CAD yen. On other charts, depending on the dynamics, we could know exactly how far this boat is going to move in this direction before it reverses and starts to head here. So when we're looking at the ship from above, it starts in this landmass. It travels to this island. It leaves the island in this direction and then turns around, goes around the island and hits its destination. Okay? So if we believe this is the course that this ship is going to be taken, then what we want to do is we want to gauge when this turning point is going to take place here and get into a position here to ride along for this move like that. Okay? So I believe that's the situation that we got going on here. If we take a look at the monthly chart again, you can see that price contacted this area. It dropped, but you see this momentum starting to pick up here. This is what I'm talking about. That's that momentum of it shifting back up. And we want to know where we can start getting in so we can take advantage of the move higher that we expect. Because when we look at this chart, it's very hard to determine what direction it's going to take based on, where the zones are and what is in play. But we can gauge how powerful the Canadian dollar is going to be and how weak the yen is going to be based on looking at those cross pairs and looking at those charts and the dynamics in play on those charts. So that is what we've done, and we've determined that there's a likelihood that price is going to continue over the long term. Okay, long term meaning multiple weeks, multiple months. All right, so it'll take some time to play out, but just looking at the snapshot of what is taking place with price right now, that looks very much like that is what's going to be taking place. And then we just wait for the chart signals. Okay, that's it. We just wait for the chart signals. So we're still waiting for that at this point. Any other charts? Let's see what else we got here. Pound Swiss. Pound Swiss. Let's take a look at this one. Pound Swiss. I haven't looked at this chart for a long time, and this is the reason why. Not much to trade here. I mean, look at that. This is months. This is months. Okay. Multiple months. Look how long. 2017. It's stuck within this range. And I know a lot of traders like ranges because they like to short at the highs, buy at the lows, but this is a weekly chart. Okay. There's no rhyme or reason. This is like a boat in the middle of the ocean, and some winds blow it north, some winds blow it south, and then some winds blow it north, and then some blow it south, and sometimes they go around the island to a little bit further destination, and then they reverse back down. These type of charts are not highly predictable. This is one of the reasons why I don't trade this chart, is because it's not highly predictable. Okay, but if I was to do some analysis, I'd say that there was an institutional demand area down here, and if I wanted to go long, it'd have to be from this area. Okay, buying right here, it's in the middle of the ocean. How do you know it's going to continue higher? Okay, yes, you could look at lower time frames and look for structures to be built, but let's look at the daily chart. Look at this. Does this look like any structures are being built here? No. Okay, this is just ranging. How high does it go? How low does it go? How high does it go? How low does it go? We don't know. So this is not a chart that I'd be interested in trading at all. I'd have to stay away from it. This is one of the reasons why I don't trade this chart, and I don't have it in my watch list ever. Let's see some of your comments here. Not sure whether you cover USDZAR. Okay, we looked at that one. Benedict 10. Oh, so Benedict, you were looking at Aussie Japanese yen. You were thinking trading it to the downside, huh? Yeah, that is risky. Very risky. Okay, trading it to the downside. I don't see any institutional supply here until up here. So trading it down, you have to have a reason to short it. The only reason I would short something is if institutions were creating structures to facilitate a move to the downside, or institutional supply was in play. If those things weren't in play, if none of those things were taking place on the charts, then I wouldn't be interested in shorting. So at this point, yes, could price drop? Yes, of course, sure it could. Okay, just like it dropped here and just like it dropped here, yeah, it dropped. But what else did it do? It stopped in the middle of the ocean and the winds changed and blew price to the upside. So there's nothing consistent here. So when there's nothing consistent, I can't trade it. It's too risky. Any other questions? If not, I will let you know that we are going to start a new class. Okay, it starts on October 11th for all those members. I did send out an email to notify you about this class. So October 11th, we're going to start looking at we're going to continue on with this US dollar Japanese yen. I got to change the title here to US dollar Japanese yen, but we're going to be looking at the US dollar Japanese yen, the daily chart. This is part 2. So we do have part 1. If you want to review part 1, I would suggest that you do. Okay, the part 1 class is right here. This is our archive of previous classes. So go into this one. If you're a new student, just click on US dollar Japanese yen daily, and then you'll come across all the sessions. Okay, these are all the sessions that we did, all the way down. 3 of 7, 5 of 7, 6 of 7, 7 of 7. Okay, and what you need to do is update your charts to all the institutional supply and demand and trend lines on the charts up into this time frame here. Okay, you watch this session that we completed May 31st of this year, and make sure that all your chart work is there, because in order to participate in this new class, you're going to have the chart analysis done. Okay, you need to have the previous historical chart analysis on your charts to be able to participate in this class. All right, so this class starts on October 11. You can just click on here, on this button here, and it'll take you to session 1. And to register for this class, just click here, register for this class, and you'll be able to register. Okay, and if you want to know how to access this from the main page, it's very simple. Just come to our student portal, and you'll see that on the date here, October 11th, there's this here. You click on it, it gives you a link. Click on that link, and voila, it opens up, okay, to the class page. Click on register for this class, and you're all set to go. All right, ladies and gents. So if you're a student, make sure you participate. Make sure you come. So many of you have been sending me your homework, and it's just incredible how much you guys are acquiring those skills and grasping the concepts and principles that we are teaching here at the school. So continue to work hard, continue to submit your homework, and if you have been considering joining the school, now would be a great time, because you have the rest of this week, you have the weekend. All right, I know it's Thanksgiving, a lot of people will be celebrating, but if you have some time, spend some time this week looking through our video lessons, okay, going through the previous US dollar Japanese yen class, looking at the sessions, taking all the information in. There's so much in these sessions. Each session is like an hour and a half, and there's so much goodness in here. All right, go through the sessions, take out your journal, write down what you're learning, and build up those skills. Come prepared for class. And then if you're not going to do the homework for the first class, that's fine. Join the first class and just see what we do. And I'll be handing out the homework at the end of each session. And if you're a very busy person, no problem. You don't have to do the homework. The key is to be part of the sessions. Watch and learn, grasp the vocabulary, grasp the concepts, ask the questions. These are the important things, okay? So that's it, ladies and gents. I'll leave you with that. Thanks for joining today. And the NAS 100 we already did at the beginning of this session, so you can watch it afterwards, okay? It's going to be uploaded the second that I stop this stream, and then you can take a look at it. All right, ladies and gents, so enjoy the rest of your day. And again, thanks for joining, and we will talk to you soon. Take care.